Absolutely, Shrishti. But let's get a view on the markets. We have now Rohit Srivastava, who's the founder of Strike Money Analytics and Indiacharts, who's joining us. Hi, Rohit. Thank you so much for joining us. Good afternoon to you. Rohit, talk to us about the construct of the market. Have we, we are, in a very, right now we are consolidating, have we really discounted the entire Iran, saga that's playing out? From here on, what is the way forward? What are you seeing on the charts? And let me get your view on the sectors as well, because Nifty IT that was outperforming, that has moderated today with Nifty Auto taking the lead.
Yeah, so it's an interesting setup. I think what has ended up happening is that the entire move that started from the bottom we saw in the first week of April has probably come to an end. And what we are now seeing is a corrective phase. You can call it a correction to the rise, you can call it a consolidation, but a much needed pause before we can continue higher, as the market has done a good catch up with whatever earnings growth we've seen for this quarter. Now, of course, geopolitics is playing a role in the short term. There's also the FOMC meeting which will be coming up tonight. So it's a mix of all these things that are playing on the market's mind, because to some extent you can discount geopolitics, but on the liquidity side, the US may not definitely step in today. So that is going to be the main concern. Though domestically, we have stepped up liquidity, which is the positive of it. So in light of all that, when we look at the charts, we are seeing the Nifty fail, get past the 61-66% retracement of the most recent dip that we saw from 25,200 down to around 24,500. So 66 is around 24,980. So the view is that as long as we don't cross 24,980, and even more if today we are closing below 24,840, then we could be headed back to around 24,200. So that gives us another 600 points down at least from here. It could be more than that, but that's a minimum that we will probably go with on the Nifty itself. Now, with that, if I switch to the Bank Nifty, similar levels would be 56,070 on the upside, which is a resistance. We'll watch if it breaks 55,380, and if it does, then it would open up, a dip towards 53,500. So slightly negative in the short term over the next 1 to 2 weeks is what I'm thinking. Things would improve after that. I do think the April bottom is a lasting bottom for the year ahead, but in the short term, there is room for a further correction.
Short term, there is room for the further correction. But Rohit, in this correction, which sectors will participate the most? Where do you see the data build up not that great, and which can actually contribute in the market decline?
So typically what happens in this phase is you do see a slight shift towards defensive sectors. I think partly the buying in IT was also based on that. So you did see some buying in IT. I would also look at the pharma sector for a possible comeback in a weak market. And lastly, of course, FMCG. So I think it's like back to the defensives as far as the next 1 to 2 weeks are concerned. Now, eventually after that, you want to be buying growth stocks again. So this would only be a trade. And when you go back to growth, then at least IT and FMCG are not in my wish list for the long term. But near term, because of the defensive market, that is what would hold out better, or even maybe give some positive return.
All right, Rohit, thank you so much for taking the time out and joining us with your views on the market. But